Hey, welcome back to ICT Trading Concept. How are you all? So today I'm gonna talk about the last fair value gap concept. This is going to be the second part. As I explained to my Twitter, I thought, okay, let's make another video. This is the time to make the part 2 video. Okay? If you didn't watch the first video about last fair value gap, please don't skip that one. Go to my channel and watch the first part, and I will put the link to my description or at the end screen. So please watch that, okay? And then this is the second part. I will talk about Friday price action. That means the 8th of March 2024. That's the Friday. So I will just talk about this Friday price action, okay? And over here you can see this is the last fair value gap from hourly chart. Price came to that last fair value gap, then boom, okay? Again, it come here to that last fair value gap, from here to here. This is the last fair value gap. Price came here, that last fair value gap, boom again. Okay, so this is my buy. This was my buy side liquidity. Here is my sell side liquidity. Your first job is to mark the liquidity. Okay, you just can't skip this one. This is the first job. So now I don't have any buy side liquidity because buy side liquidity has taken in Friday. I have this sell side liquidity. Look at this sell side liquidity. This low and that low. They're relatively equal lows. So this is my sell side liquidity. Right now I don't have buy side liquidity, but Friday I was bullish until that buy side liquidity was taken. Okay. So I will talk about only this Friday price action, and I will see you the precision. Okay. Let's go to 15-minute chart. So over here, this is the new week opening gap, and this is the new day opening gap. Both of this level is very important. Remember, this is the hourly fair value gap, hourly last fair value gap. So you can see market came here to that hourly last fair value gap, then it went higher and take that buy sell liquidity. Now you can ask me why I mark the hourly fair value gap. The reason is from 15-minute chart, it's messy. Okay, it's not clean price action over here. So I have to go either hourly time frame or 15-minute time frame. Sorry, 5-minute time frame. Okay, but as you can see, there are a lot of candle from 15-minute chart. If I go to 5-minute chart, there will be much more candles. So I went to hourly chart over here and here. Okay, hourly chart, and I find out the last fair value. Now I'm in 15-minute chart. You can see market came here before the session, actually Thursday at 4:15. So Thursday at 4:15, price came here to that fair value gap, then it went here, and this was all the consolidation. Then around 8:30, we had the news non-farm payroll. Price went lower. I marked 50% of that hourly week, candle week. So over here, that week, that's 50%. My target was market will take that relatively equal highs or the obvious liquidity. So it should not go below that 50%. Why this is important? Now, if you don't want to mark the weekly week 50%, nothing wrong with that. You have to go with the entry fair value gap. So this is your entry fair value gap. Above the last fair value gap, there will be your entry fair value gap. So price came here to that entry fair value gap from hourly chart and expand higher. I'm coming back one more time to 15-minute chart here. So price came here to that entry fair value gap. Again, why I'm using hourly gap? Because from 15-minute chart, it's messy. Okay, it's very messy. I mean, see, no fair value gap is clear over here. Nothing is clear over here. So I went to hourly fair value gap. Now I don't need this hourly entry fair value gap. The reason is I have the week, and this week 50% actually works as a fair value, last fair value gap 50%. Okay, so both of them are the same. Now I don't want to teach you this week concept, but I'm gonna use the last fair value gap only. Okay? At the same time, this is the new day opening gap. You can see how the body closed inside the new day opening gap. So price came here to that new day opening gap, went higher, very near to that buy side liquidity, but it didn't clear the buy side liquidity. Now when it come here, I'm seeing this market has taken all this liquidity. This is the market structure shift. Where is your fair value gap? Now here I have only one fair value gap. Okay, so this is clearly 22 YT model. When you will look for the entry, when market will come to that fair value gap, when market will come to that fair value gap from 15-minute chart, you will look for your entry. You have very clean buy sell liquidity here. Okay, so now is the time to go for 1-minute chart. Here is that 1 minute chart, and you can see this is that candle. Okay, give me the market structure shift from 15-minute chart, and there is the 15-minute fair value gap. Okay, so price came here to that 1 minute last fair value gap. This is 1 minute last fair value gap. Here is your entry gap. This is your 1 minute last fair value gap. Price come here, give you the market structure shift here. I mean, let me mark the setup actually. So market has taken the liquidity here from 1 minute chart. You got your market structure shift here to that candle. This is your fair value gap over here. So this is your entry. This should be your entry. Okay, I was live and I took that entry. If you were confused, then you can watch my live, I mean, replay. So you can put your stop loss over there, and that all-time high will be your target, or the relatively equal highs, that will be your target. Now it's near about 33 handle, and risk reward ratio is 1.68. I know that it's not a good setup for you. I believe it that it's not good for you, but trust me, sometimes your risk to reward ratio will be 1 is to 7, 8, 9, 10, something like that. But yeah, still 33 handle, and market actually went more above. If you would love to use the fib or the, what to say, I mean the fib retracement, okay, here. So that candle low, that candle high, low, and the highest body close candle. If you go for that, I love 1 minus 1.5 standard deviation. So if I want to add more than one contract, then I will take a partial there, and I will hold my trade until minus 1.5 standard deviation. So whoever are with me for so long, you always, you know already that I love that minus 1.5 standard deviation, and you can see the reaction from that minus 1.5 standard deviation, and in that case your risk to reward ratio will be 1:4. But you have to take partial that buy side liquidity, that is mandatory. Okay, you have to, there is no option, you have to take the partial. So this is the first thing about the last fair value gap. Okay, now I will talk about here, after that buy setup has done, then market fall. Okay, when market was falling, that was a dramatical fall. But you know, this is the all-time high. I had no price action over here, so I don't know how long it will go. Yeah, though this is minus 1.5 standard deviation, but I don't want to believe that from the all-time high it's going to fall from there. Okay, it's going to reverse from there. So I didn't anticipate or participate any sell entry over here. I was just watching. So market when started to fall until reach here. This is the entry fair value gap from 15-minute chart. This is the last fair value gap from 15-minute chart. Anybody has any confusion about that? Look at this run, okay? From here to here. See, this is the last fair value gap from 15-minute chart. This is the entry fair value gap of 15-minute chart. What is the differences between entry fair value gap and the last fair value gap? If market reach to that last fair value gap and there is no entry fair value gap, then there is just the last fair value gap. You know how to use that. But if there is an entry fair value gap, you have to be, I mean, you have to be careful, because the setup can happen from the entry fair value gap. So this is also important. If you get the setup from your entry fair value gap, you have to take that entry. Now it's not 100% sure entry, but yeah, most of the time you will get, and not most of the time, lot of times you will get your setup from the entry fair value gap. If market can reach to that last fair value gap, that is more obvious, or I mean, what to say, let me actually remove one, there is two line. Okay, so there is one. Okay, so if it can reach to that last fair value gap and you get the setup, oh man, that's kind of awesome, awesome, awesome. So when price come here to that entry fair value gap, first I'll go to 1 minute chart. Until now, price, when price is falling, I'm in 15-minute chart, I'm in 15-minute chart. I'm not looking for buy, I'm not looking for sell. Okay, so price came here, take the liquidity. I marked that liquidity from in my life, if you remember here, this, that was my relatively equal loss. So that was my sell side liquidity. After taking that sell side liquidity, market reach to that entry fair value gap. When it will reach to that entry fair value gap, then you have to look for the setup. Okay, now how do you look for the setup? You have to go to 1 minute chart. So here is my 1 minute chart. The first rule is you have to mark, let me actually remove this one, this line. So this is that entry fair value gap, this is the last fair value gap. Okay, first rule is you have to mark your buy side liquidity. Is there any buy side liquidity? I can see there are relatively equal highs here. Okay, this is relatively equal highs, and yeah, so this is the relatively equal highs, that is my buy side liquidity. There is some more buy side liquidity here. I mean, this is also the relatively equal highs, this is also the buy side liquidity. So I have the buy side liquidity, no problem with that. I am not going for extreme buy side liquidity over here. Here I got this buy side liquidity, this two level, I'm happy with that. So this is the first time when market came to that entry fair value gap. Okay, first time, what should you look for over here? Market structure shift over here. Okay, so you can say this is the market structure shift, and here this is the market structure shift, this is the first fair value gap, this is the last fair value gap, or something like that. I'm not agree with it, with that. Okay, this swing high is not valid for shifting market structure. Why? The reason is this swing high didn't trade any fair value gap here, and it doesn't have a swing high on its left and on its right. Both of them are lower than that swing high. So you know already which swing high and which swing low you will mark for shifting market structure. If you are confused, I will put the link as well to my description. Please watch them. Okay. So this swing high is not valid for shifting market structure. Though market came here to that entry fair value gap and gave me this displacement, I'm not willing to take my buy. Why? Because I didn't get my market structure shift. So I will wait. Market, what did market do? Market went lower, 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 and finally it reached until the end of that entry fair value gap. When market came here and reached at the end of the entry fair value gap, then it gave me the market structure shift over here. This swing high is valid for shifting market structure. So this is my market structure shift, and you know market has taken all of the liquidity. So that is the market structure shift. This is the displacement. All I need a fair value gap. If I get a fair value gap, I'm willing to take my buy. So here, this is my fair value gap. Now I don't have two fair value gap. That means our well-known setup, we don't have that. But this is the classical 22 YT model. Okay. So when market came here, this is the immediate reaction as well. Market just went higher, make the swing high, went lower. Very nice displacement, very nice immediate reaction. So I'm gonna take that buy over here, and my stop loss will be just below that candle. Okay, below that candle. Why? Because you know where you have to put your stop loss. This is more obvious. Okay, so this is your setup, and you will look for your buy side. Where is your buy side? There is your buy side. Okay, so I'll just use this buy side liquidity instead of that one. I'm gonna use that one though market didn't reach over there, but yeah. So over here, this is your setup. You have to take that entry and here. Okay, until here. So you have to take that entry. In that type of situation, your risk to reward is 1:11. Why you are looking for an entry there? What is the reason? Because market reached to a level where you will get a reversal or the reaction. If it is a reversal, then market will take the buy side liquidity. But if it is the reaction, then market will reach another 15-minute fair value gap or hourly fair value gap. So this is the time you will go to your 15-minute chart and you will look for if there is any 15-minute last fair value gap. So you can see below this buy side liquidity, you have this 50-minute last fair value gap over here. So this candle low and this candle high. So this is your 50-minute last fair value gap. Go to your 1-minute chart again. Now in this type of situation, you will go for that 15-minute fair value gap low. Okay, you can't go to that buy side liquidity because this can be the reaction. You have to understand. Okay, every time market is not going for the liquidity, sometimes it go for the balance, the imbalance. Okay, that's why it went higher. Now one more thing you can do, and this is though highly risky, but yeah, you can look for the last fair value gap from that lower run below that buy side liquidity from 1-minute chart. You can look for the last fair value gap from 1-minute chart. So below that buy side liquidity, look from here, where is your last fair value gap? So this is your last fair value gap. I'm gonna mark it from 1-minute chart. I know guys, all of you have so many confusion. I'm gonna make it clear. Okay, I am going to show you the power of last fair value gap. Is there any fair value gap above that 1 minute last fair value gap? Is there any other fair value gap? Can you show me any other fair value gap below that buy side liquidity? No. So this is the last fair value gap from 1 minute chart where price reach 1 minute last fair value gap. Okay, brother, this is coincidence. It doesn't happen all the time. Okay, no problem. Let's see. So when it reached to that 1 minute last fair value gap, it went lower. This is the reaction. Okay, this is the reaction. Okay, market is falling. I'm not willing to take sell. Where did it reach? Look from here. Okay, from this low. From look from this low. From this low to that high. Where is your first fair value gap from 1 minute chart? Let me mark it. Okay, so this is the last fair value. Sorry, last fair value gap from 1 minute chart. Is there any other fair value gap below that fair value gap from the 1 minute chart? Is there? Just let me know that if there is, you can see any other fair value gap. I can't see, but if you can see, just let me know. Okay, so this is the last fair value gap. This is that last fair value gap from 1 minute chart. Can you see the precision? Where price reach? Where price reach? Did it break the last fair value gap? Did it break the last fair value gap? I care about the body. Okay, I don't care about the wick. I just care about the body. Can you see? Can you see the precision? This is the power of 1 minute last fair value gap. Now, when price will reach to that 1 minute fair value gap, last fair value gap, you can't frame your trade. You can't frame your trade from the 1 minute last fair value gap because it's nearly impossible to frame the trade from 1 minute last fair value gap. Most of the time, it's just a reaction. Look here, this came here, went higher, again came here, went little higher. So this is the reaction. Now this time market actually fall not because of this 1 minute last fair value, because of this 15-minute last fair value. Remember, this is the 15-minute last fair value gap. Though it went little higher of that 15-minute last fair value gap, and this is the end of the week and end of the time of the Friday. So yeah, it was little volatile over there, and it went above that 15-minute last fair value gap. If you go to your 15-minute chart, here, see, this is just a fake breakout. One candle close above the 50-minute last fair value gap. The very next candle close inside the 50-minute fair value gap. So this is the fake breakout. So yeah, sometimes it happens. Okay. So yeah, you can frame your trade from depending on the 15-minute last fair value gap, but you can't frame your trade from 1 minute last fair value gap. This is the reaction. So if you take that entry and if you want to take your partial here to that 1 minute last fair value gap, nothing is wrong with that. My advice is please take a partial here. Man, it's 74 handle. Okay, just look at this 74 handle, and this is a liquidity. I don't need that on, not anymore. So this is 74 handle, and your risk to reward is 1:5 or something. If you don't want, if you have more contract, then can go until that 50%, or you can trail your stop loss. Whatever you want, you can do. You can look for the 50-minute last line, 50-minute fair value gap last line, or finally this one. Okay, this is the highly risky. If you ask me, I will never go for that. I will take a partial when market will tap to the low of that 50-minute fair value gap. If I have more than one contract, then I will close my trade when it will reach to that 50% of that 15-minute fair value gap. I'm done. I'm done. In that type of situation, it's near about 1.6 risk to reward ratio and 99 handle. Oh man, that's my dream. But yeah, can you see the precision? Okay, I'm just showing you the Friday's price action. If you ask me, or if you can go to other time frame, I mean other days, you will see the precision of the last fair value gap from 15-minute chart and the 1-minute chart. Okay, so this is the 1-minute last fair value gap. This is the 1-minute last fair value gap. How price react from the last fair value gap from 1-minute chart, and if you go to 15-minute chart, this is the last fair value gap. This is the entry fair value gap. As our well-known setup, market has taken the liquidity market structure shift. This is the first fair value gap. This is the entry gap. So you have to understand that market can reverse from 15-minute entry fair value gap, or if it wants to go higher, then it should not break the 50% of that breakaway gap. So last fair value gap is working here as a breakaway gap. So it can't break the 50% if it wants to go higher. If it wants to go lower, which I want to see, actually market should go lower. and take that sell side liquidity from Monday, I mean for the next week. Okay, so I want to see that. But yeah, I guess guys you got something from here, and if you don't do the back testing by yourself, trust me, nothing is going to help you. Okay, nothing is going to help you. Please do it by yourself. You will understand what is the precision. Okay, over here. So first thing is you have to look for the liquidity. Where is your liquidity? Here from hourly chart. I'm going from hourly chart actually. This is my sell side liquidity. That was my buy side liquidity. I was bullish in Friday, so I was looking for the levels. There was on last fair value gap from hourly chart. Here is the entry fair value gap from hourly chart. Look below this hourly, I mean below this fair value gap, there is the last fair value gap from hourly chart. So this is the called the entry fair value gap. The power of entry fair value gap is too important, too strong. If you stay with me for some days long, and if you join to my live streaming, you will understand that. Okay. So guys came here. I will look for the reaction. If I am sure from the 50-minute chart, I don't need the hourly fair value gap. In that type of situation, this is the entry fair value gap from 50-minute chart. Price came here to that entry fair value gap, gave me the setup from 1-minute chart. Here from 1-minute chart, you can see the perfect market structure shift, fair value gap, entry, and everything I explained. Okay, last fair value gap from 1-minute chart, last fair value gap from 1-minute chart, everything I explained. If you know that you will get a reaction from the last fair value gap, it will be very easier for you to understand why market is falling and why market is going up. Okay? So I guess that it will help you a little, but if you have any question, you can comment it below the video. Okay, and I'm gonna put the first part of the last fair value gap concept to the end screen also in the description. So be safe guys, happy weekend, and learn more, earn more. Okay, if you're new, you can subscribe to my channel, give me a like, share my content. Okay, see you guys, bye bye.